Good afternoon, everyone. This is Chrissy from Solstice ATR. I hope everybody's doing great on this lovely weekend. It's sunny wherever you are. Here in California, the weather's great. It's around the 73 degrees. We are on Twitter, Instagram, as well as Discord. You can DM me. We use adaptive algorithm for one use and one use only for active trading. Whether it's a swing trade, day trade, long-term trade, we look for levels. It gives us the signal with no biased opinion. This week's video is used for illustration use only. We're not a broker-dealer. Past performance does not indicate future results. Use at your own risk. Data may not be copied. Check the website policy. Let's first start by taking a look at the slides that I want to present to you. Here I have the S&P 500, which is the Fortune 500. You can use the SPY. You can use the ES Mini or the Micro Mini to give you an overall view of the Fortune 500 companies. We have looked as far as 1982 and 2010, where there was the recovery after the, a recession, a reversal. What was the maximum drawdowns per day after having a downside risk? This COVID case here that we had in February 19th till March 23rd, we eventually reversed in April, was a reversal cross bullish candle when the 50 and the 18 crossed, and we continued higher. Last year, January low was never revisited. The March, we got close to the May in June, but couldn't. July got close enough, then we continued higher. And then we had the October reset, then we had the November rally, December, then we eventually, the last 2 weeks of the market in January, we have lost a little bit of, gains in the market. Does this mean we are going to be downtrending? We're going to trade what the market offers us on daily basis, weekly basis, until we come out at this level. I have taken the March low, and you can see I put a line through it. We eventually fell through that linear regression or uptrend channel. We fell down. We are above the 50 simple moving average. This is the annual low to high for the year on the SPX. We are reaching the 4,300 area, as well as the 50 simple moving average. Can this continue lower? Yes. Can this reverse and go back up? We can. But remember, the maximum drawdown was on the short term under 12 month. Minimum days was 2, and the highest days we've had in 2004 was 98 days. So the maximum average drawdown is about 5%, 54 days it can last, and 4,300. Is it possible to be tested? Yes, of course. This was last month illustration where I took the data and I put them in. That was on 11/30/2021 because we were heading lower, and eventually we reversed in December. This was the reversal down, and in December we rallied back up. January we fell back down. Does this mean we can test the 4,100? Of course we can. Can we reverse back and go higher? Yes, but I want you to have an open mind what the market overall is doing. The most important thing is pay attention to volume. Was there institution and retail sellers in the market? Yes. Next week we have the federal board announcement. Can it cause a reaction? Yes, it can probably be blip on the map because maybe they may not raise more than 2 times for 2022. People are expecting 5 times. Maybe it'll put a little bit of a red flag in case they do that. But let's pay attention to the next slide. I put the NASDAQ 100. This data is as of January 19th, 2022 close. We have the NASDAQ historical drawdowns in 1996, 98, 2011, 2015, 2018, 2020. It goes as low as 1% and as high as 15%. The average drawdown is 7%. These are the maximum drawdowns as of January where we can head to. I did not mark them on the charts. I just used the 50 simple moving average, the 116 and the 200 SMA. I put a 250 there as a reference point so people can pay attention to those moving averages. If we end up staying below that 50 simple moving average and heading towards the 38.2 fib, this will give us an idea how far we can go down if the maximum drawdown is that hard. If not, we can reverse back up from the mean and continue higher. But remember, this has the combination of the two instruments. I put the NASDAQ and the S&P, I added them together to give you an average combination of the two. You can add these numbers. I just wanted to do something different on the slide. This is the S&P 500, now 1996 drawdown, 98, 11, 2015, 18, and 2020. The minimum was around 0.27 and the maximum was 18%. There was 171 days drawdown and an average of 33 days drawdown. The 4,500 up there, can we go as low as 3,600? Yes. But the most important thing, do we reverse from that maximum drawdown to continue higher for the next couple of years? We can. We're going to trade what's in front of us, not what we think. And this is the most important thing. Historical is in a back end as a reference point. It is not a prediction. You have to look forward on the charts and try to figure out what the sentiment is on that daily basis to make adjustments according to your objective in your portfolio, whether it's a short term or a long term. Let's go to the last slide. Here is the good draw after the drawdowns, what can historical facts can do to us. This one came from Respoke. It's from Twitter. They do good overall review of where the drawdowns on the NASDAQ after 10%, 15% drawdown, 20%, or what's the reversal continuation in the future, like in 2010, 2011, after the 2007, 2008 bubble, that we had the 9, 10, and eventually on the third, we took off and continued higher, correct? So we have to pay attention. What was the 1 month uptrend, 3 months uptrend, 6 month uptrend, 1 year, 2 year, 3 year? We do not have the 2019 historical for more than 3 years. We do not have 2020 rate of return more than 1 year or 2 year. Are the numbers going to be good? Possibly. Are the numbers going to be bad? Possibly too. We have to evaluate the bulls versus the bears in our illustration to overlook everything that's on the chart to trade what we see, not what we think, and take it step by step in evaluating what the overall return is. If we can have a 1 year after the correction, a 30% move up, that's great. We can have a 10%, we can have 80% return. The most important thing, we are a little bit under on the NASDAQ, the 50 simple moving average. The S&P has not touched it on the weekly yet. Can we reverse and go back to, we have a linear regression up channel, down channel, and this is coming from the October of 2021 going up to the January, then we continued December, then we continued higher. I drew that open cone in case we lose the 50. This is where we can get a drawdown, then we can reverse back up. And the annual chart from high to low, this was the prior year Fibonacci, not this year from January of 2021 till December 2021 fibs. I did the prior year fib and I left it on the chart to show you in relationship what was the prior year's high. Can we come back to the June, July area? Possibly, but I want you to be paying attention to that channel and that 50 in case of a reversal back up. Let's go here step by step. We're going to remove the slide. Here I have the S&P, the NASDAQ, the Russell, and the Dow. The combination of the four. This is the February once again. This is the March low. Then we reversed and continued higher. This shows that the 50 simple moving average is lost. This is the consolidation in May, June, July prior year. This was the October reset. We had the October, November run. Then in November, we fell in December, we had the Christmas rally and the holidays. Then in January, we fell back down. We are in compression to the downside. Does this mean that the compression can come back and retest the June, July area from the prior year? Possibly. If this is going to find support, we will look for this area of consolidation to reverse back up on the combination of those four instruments. If not, we will look for the May and January, March of 2021 area as an area of support. If I take this high here and I just click it and I bring it down to here, we have a 9% drawdown on the combination of those four instruments. If I'm going to get a 12% drawdown, it's going to be about 53. If I'm going to get a drawdown of 15%, just if I want to look where the 15% is, that would be around this area here. That's the 51,470. So if I want to look at the drawdown in reverse in relationship to going back up, we have to pay attention what the totals are. And even if we get a 20% drawdown, this is the 38.2 Fibonacci and the 116 simple moving average catching up a little bit above the F3, which is a 38.2 from annual low prior 2 years, the low here, to this annual high. The 38.2 is close enough to the 116 simple moving average. I hope this was helpful. And let's go break it down step by step a little quicker. We're going to look at the ES mini. We're going to go down to a 1 year shorter time frame. I'm not going to go more than 9 months out because we don't need to go that far yet. We can keep it simple and easy so we can see what the charts are offering us. On the annual chart, I have the annual high and low where the fib is. This is my 38.2 sitting at 4,300. My 250 simple moving average is sitting about 4,300. My 200 SMA is sitting at 44.22. We fell a little bit below it on Friday, maybe the sell-off panic in the last couple of days, and institutions sold these regions. We had a linear regression up channel. We eventually fell through it, these two smaller lines. This is the support from November lows. Is it possible we can retest it? Yes. Is it possible we can reverse and go back up? Yes. And this is the June, July. This is the June low, and this is the July low of last year. Pay attention to what the charts offer us. This prior box, we retested it in October, November. So pay attention if we get a reversal in the S&P 500, not continuation to the downside. We're going to trade what we see, not what we think, because remember, the Feds are announcing their news on Wednesday. Let's take a look at the NQ. NQ is a little bit more under pressure. It has lost from the annual high to the low. Annual Fibonacci, it has lost the 50 fib on the annual, lost the 250 simple. And the 200 SMA, we had it marked in the prior weeks, you know, the videos. I said I marked these, and I said be careful if we cannot clear this area and we cannot go up above this linear regression up channel, we can fall down. We lost that annual linear regression channel that was coming. If I put my mouse on it, you can see it's coming from March 6, 2021 till May 19, 2021. So we lost that level. We retested it, looked up, fell back in. We are a little bit below. Can this act as support? Possibly. This is the gaps we had. You can see I have two little markers here. These are in the overnight action gaps. During the trading hours, you cannot see them because it trades in the overnight action, the NASDAQ. So if I put the NDX, you'll see those little gaps there. I have them marked. If this is going to be acting as support or not, we have to pay attention to these candles here in relationship to what the market can do for us in the next week. So let's take a look at the RTY. RTY, in the annual chart, we were range bound between the 2350 and the 2100. Eventually this year, we fell below that 2100. Could it do what it did the prior year in November, look above and fail? Or could it, since it looked below, can it come back and reverse back? Remember, the fear gauge, the canary in the coal mine, the small people act first, because they look for small value. They don't look at large cap growth companies. They don't look at the bigger companies because they cannot afford it. So they look for the smaller companies that they can afford and, you know, throw a couple of grand into a company that's $5, $10, $20 range. And they will purchase that in the small cap or the mid cap in relationship to the S&P 500 pool value or the S&P 100 or the NASDAQ 100. because they sometimes cannot afford it. They have to play with the options. So we have looked below. Does this mean we can continue? Possibly, but is it possible we can reverse? Pay attention if we come back above the 2050 and the 2100 in the small cap. Let's take a look at the Dow Jones Industrial Averages. This is more of a concentrated portfolio of the 30 companies in the US. We have to pay attention to that 250. We had a linear regression up channel. You can see I did not make much channels on the Dow because I don't put much weight to it. I only look at the Apple, the Boeing of the world, the Chevrons of the world as a reference point. If I'm going to trade them, I'm going to evaluate my position for the long-term hold, not the short-term. So usually these trades are longer-term investment holding. Maybe you'll hedge your positions. We have lost that linear regression up channel, the purple one. We fell through this one. Does this mean the 38.2 Fib will act as support? We have to pay for the 33,800 to see if it acts as support, or do we retest the June or the July lows from the prior year? And you can see I have a linear smaller regression channel coming up on it that I connected the two control points, or pivots they call them, or reversal bar. Usually I call them, these are reversal control points for myself, because they are considered, these are the lows or the highs of that month. If I do break above them, I look to go higher. If I broke below them, I look to see if they find support and break back up or below those areas. This is a very important area for me in the Dow. Let's take a look at BTC. Bitcoin, before I go to gold. Everybody, when I called the 67,000, 65,900, everybody was looking at me like, hey, you're a madman calling BTC to the short side. I said, look, for every apex, there is a reversal. I'm not trying to put ego aside or anything. I just want people to understand the sentiment and the changes behind every trade. You have to trade what you see, not what you think. And remember, this is the future contract on BTC. It has lost that 52,000. It has the 47,200, has not been able to go above it. And we eventually fell through. We tested the 36,500. Is it possible we can come back and refill this gap? Every gap has been refilled on the way up. We refilled it on the way down. This is the virgin gap as well. These gaps have been tested, no longer valid. Those gray areas should no longer be. Remove drawing, and I'm going to remove that gray area. No longer, I'll just leave the gap there. Usually when a gap is still there, I'll leave that gray area there, like I left this one here. So usually gaps are retested. Everybody's looking as valued at the 29,000, 30,000 to act as support. If it does, that's great, and it fills the gap and reverses back up. That would be coming back from the mean at the 30,000, 30,200, 29,000 area as support. If it does not, your fib extension for the monthly of the prior month expected move from here to here, the time spent in relationship to the 0 to 100, we're retesting the 100, bounced off that channel. Does this channel hold it to give you support, or does it fall to fill this gap, come back to the 23, the 38, 50, and eventually the 61.8 to find better support and go back up? If this finds support here and reverses back and clears this down channel trend, then things would change in BTC. If we look at Ethereum, ETH, I'm just going to go over it a little fast. ETH, you can see that Ethereum came down in that linear regression channel. The monthly expected move, it blew right through them. Does this mean it's going to retest the prior gap here and this one here, which is still open, virgin control gaps in Ethereum? Let's take a look at GC. GC started to act a little bit more stronger in the last week or so. It looked down, looked up, looked down, looked up. This is a linear regression down channel from way up there from 11/16/2021, and this one is from 1/6/2021, 11/16/2021. Is trying to look up. Does this mean this area is going to access support, the 1810, 1816, and eventually we break through that linear regression uptrend? We have a channel here. We have a channel up here. You can see I drew this one. It broke through it, tested it, fell back in, getting the support on the 5 simple moving average. The 20 should act as support if it's going to continue and break above this channel here, then off to the races to the 1890 in GC. Let's take a look at next CL, crude oil. Remember, prices of crude are across the pumps, especially in California and the larger states. Some states don't have that pressure in the taxes and the pumps. So we have looked above that 80 annual high, which was right here. This was the annual high from last year, the 85.41. We looked above it once, twice. Let's say this is 3-time top. Does this mean it's going to hold, or do we reverse back to the 18 simple moving average or the zero line, which is around the $79, $80 to come back up to continue higher? Can prices go to 120? Possibly. Could it fall back down to 65? Because there is shortage in oil, because they stopped the pumps and the international markets. They got to figure out a way. They're trying to go to sufficient energy, but they're still using coal. They say, oh, we're going to use batteries, operated cars, solar power, but they don't provide enough to keep everything running. So there have to be a solution somewhere where we can meet or find another way of getting oil at a lower price, because we're running out of real estate. So the prices are skyrocketing. The Biden administration closed the pump. We were efficient. Now they try to make it less efficient. They want to go to some other products to create revenue out of it. So pay attention to crude oil, because it's part of the transportation, the shipping costs, and all that kind of stuff. Let's take a look at a couple of ETFs, NYA. This is the New York Composite. We can see that the New York Composite has lost the 200 SMA as well as the 250, testing the mid-range between the 23.8 and the 38.2 fib on the annual chart in NYA. Let's take a look at RSP. We can see it's below the 200 SMA, retracement a little bit. Let's take a look at the SCHG. We can see that the large cap growth companies has lost the 200, has lost the 250 SMA, came back to the prior June area. This was the June low. This is the May low. Do we find support in this area where that top was, or do we find support here where we got the breakout in June to continue higher in large cap growth? Let's take a look at XLK. This is the tech sector. We can see we are sitting on the 200 SMA. Pay attention to the XLF. The financial sector have falling a little bit. XLE, we're going to pay attention to the banking as well as interest rates. IEF, similar situation, interest rates. IEI. I'm trying to go a little bit over the shorter term treasury bonds, the 5-10 year, instead of using the TBT or the ZN or the ZB. The futures, I'm showing the ETFs, and we're going to go to ARK Management, ARKK. We can see that ARK Management from the annual high year to date has lost more than 80% of its value. I think it's about 87. If I take this high here, I click it, take it to this bottom here, we are at, if you can see, 206 days, we are 143 bars, we are at 61%. If I do this for, let's say, 2 years on the chart, we'll just go 2 years on the chart to show this is the ARK Management Fund. If I take this high from the prior year to this low here, we have lost about 88% of the fund in less than a year time frame. Thus, Kathy able to sustain the fund to get a reversal, rebalancing their positions in order to go back up. It's at the 62%, which is around the $62. Better get support in that area, or she's going to be in a lot of pain on that fund. So that's why I put it up there, just to give you a better idea. We can take a look at AAPL. Let's go 1 year out on those charts. We'll do a couple of stock, large cap, couple of equities. We can see that Apple on the annual chart lost the annual high. It looked above it in November. This was the January, then eventually fell back in. Apple has lost the 50 simple moving average on the daily, but it's holding the 50% Fibonacci cannot find support around the 155, 152 area in order to reverse back from the mean. This was the prior area that it got a breakout. I think the 151 area, 150, 52 is very important area in Ample in order to find support. So let's take a look at Amazon. Amazon is in a similar situation in the last 2 days, 3 days. There's a lot of heavy selling in Amazon. Let's take a look at Facebook, FB. Facebook is, it was in a linear regression up channel up here, then eventually fell down. We're still in the upper lower channel. This channel no longer valid, remove it. This channel is intact, remove the drawing. We can put one here from this area to this one here to connect that downtrend. We have to pay attention to this one. We can do one this way. We broke this we broke this long term Fibonacci from March 18, 2020. It was connected till December 4th of 2021. We have lost that channel. We came out of that symmetrical triangle to the downside. Does this channel find support either at the 61.8 because we had lost the annual Fib 50, or do we find support on the backside of this linear regression channel? And where this gap is, this is very close to this filling this gap. This is the March before the rally up, and you had the April. Then we had the May low, then eventually the June, then we took off, then we've been range bound in Facebook lately. Let's take a look at GOOGL. We can see GOOGL is coming in, lost a 200 SMA. It has to find somehow some support. This is a professional gap on Google after the earning report. We do have one down here too. I hope Google will find support at the 2500 or it reverses a little bit earlier. Let's take a look at Tesla. Tesla has lost the 1,150. This is an important mental number. We below the 1,000 area, 950. Pay attention to the 975 if we cannot reclaim it. The 116 SMA may not act as support. We are still in that downtrend. We looked above this channel. You can see I had this linear. We looked up, tried to come back, tried to break up. We fell back in. Does this 116 get support, or do we find support at the prior consolidation here before the breakout? We do have this gap here on the charts around the 850 on Tesla. Let's take a look at Wind Resort. I'll do the casinos, for example. You can see not much. If you look at LVS, not much there. If you look at XOM, ExxonMobil is at the high. Chevron CVX is at the high. You look at the John Deere or Caterpillar CAT, you can see it was trying to go up. It fell a little bit DE. So we have to pay attention to the different sectors and the different instruments in order to find support. If you cannot trade equities, look at the ETF fund, the different 12, 13 sectors, the XLPs, the XLEs, the XLFs, the XLIs. So that way you can find a way to rebalance your portfolios instead of staying all intact. Look for different instruments to help you out to find dividend yielding accounts. And let's go back to the S&P 500. What I want to do is go to a 45-day. It's going to look very noisy for you, but this is very important. I like using a 45-day range. It shows me where the annual high was and the weekly. You remember this was the weekly high, so I have to reactivate that weekly, activate the drawing. So we're going to grab it. This was a Friday, Tuesday. Remember, this was the long weekend, so we have to anchor it from the day we came back, because Tuesday, Monday, Sunday was the overnight action. So this is our weekly high and low for the week. We lost this channel. I had it marked in this shorter channel on the weekly chart. We fell below the standard deviation. If you take this high to this low, or you take this high to this low here, do we find a reverse mean? I can just give you kind of an idea. You're usually looking at distances when we travel. If you look at this distance here and we duplicate this chart, we let's say we go let's do this one. We go duplicate, and I just grab it. I'll put it from where it broke down. You see it right here. This is a little further, but if I put it where it looked above and failed back in, we are almost retesting the same area from the prior week. Does this 38.2 act as support, the 43.50, 43.45, or 43.25 in order to reverse back up to continue higher. And if I just activate this box, what I want to do, activate it, okay? And I want to drag it to where the breakdown was of this area here so you can see it. So basically, this is why I am saying if it does come back, this area should give us a little bit of support. And this is from the monthly measured move, the 261 and the 250 would be right here with the 243, 45. I'm not saying it has to go down there. It can reverse back up, but pay attention to what the charts offer you. You can use the volume profile, momentum indicators, supply and demand zones to find out ways to give you better ideas how to trade, and don't have a biased opinion, because if I do put the cumulative tick on this chart up and I just go in using the cumulative tick to tell you a better idea if the sentiment was down or high, and I go to a faster 15-minute, if I go to a 15-minute chart, we can see that the sentiment when the last couple of days came in, we came very heavily to the downside here. We tried to reverse in the morning on the gap down, couldn't hold, sustain it, and eventually we fell down. I hope this was helpful. I look forward to seeing you next week in our chat room. If you like, you can DM me. Take care. Over and